In this talk, I will go over the main reasons contractors and small businesses may want to form an LLC and the related accounting and record-keeping requirements. Traditionally, a corporation or partnership business was created to provide limited liability. So these businesses are considered a separate entity, almost like its own person, separate from its owners. And the business entity is liable for itself. Limited liability means that the owners of the business are not personally liable for the debts of the business. This means if loans were made to the business or if someone sues the business, only the business can be held responsible. Creditors or angry customers can't take the owner's house and retirement savings away. Sounds great, doesn't it? However, these business entities had many rules and requirements for operations that a lot of smaller businesses were not following. And if you don't follow the rules of the business entity structure, then the business entity doesn't actually exist. And creditors may be able to do what's called pierce the corporate veil. And in this situation, because the business did not follow the rules, it is not considered a separate entity from its owners, and therefore the owners can be held personally liable, which means their homes and savings could be taken away to pay their debt. So more recently, the LLC business entity was created to provide that limited liability protection while making the business easier to form and operate than those other types of business entities that provided limited liability. So if you are a contractor or a small business, limited liability for debts would not be a good reason to form an LLC because you will most likely not be able to get any loans that would not require you to personally back the loan. So only established larger businesses with substantial activity and income flow would be able to take out loans and obligations, with only the business guaranteeing repayment. However, as a contractor or smaller business, you may still be interested in forming an LLC for limited liability just in case you are sued. Limited liability protects the individual's assets and future earnings. Instead, only the business can be sued. So when taxpayers form an LLC, the LLC is actually a disregarded entity for tax purposes. And how the LLC is taxed depends on how many members the LLC has and how the LLC has elected to be taxed. So any LLC can elect to be taxed as another entity, like an S corp or a corporation or partnership.